Let's talk about this number today. People are hoping that it's going to be in the low 7% range year over year. That's still incredibly high. If we get a lower number, maybe we can think inflation is starting to break. What's happening here? What would you do if you were still Treasury Secretary?
Well, as you know, I don't predict numbers, certainly not a half an hour or 20 minutes before they come out. I think whatever the number is today, whether it's a little higher or a little bit lower, it's going to take a while to know exactly where we are and whether or not things are settling down to a place that's going to get back to where we need to be on inflation. So I think all of the market speculation about is the Fed going to move quickly, to me, is premature. I don't think the Fed's going to change its course. I think they've signaled broadly they're going to do 50 points this week. I think they're going to hang tough until they're sure that inflation is coming down into a safe zone. And that's going to take a long time. It's not going to take a week or a month. It's going to take many months. So if today's data is good, I think people and markets should be careful not to overreact to it. If it's bad, I would also not overreact to that. The numbers are going to bounce around. I think what we know is that inflation is trending in the right direction. The range of predictions is, will it stabilize at 3 or 4 or 2%? So we're not going to stay at these very high levels. I think the Fed did an enormous amount to get us through COVID. If they were late by weeks and maybe a couple of months, not a very long time. And they've been quite clear that they're going to deal with this until the inflation is wrung out of the economy. It's a tough balance between making sure you deal with inflation, but that you don't trigger a deeper recession and more unemployment than you need.
They're sort of on the record saying they'd rather overshoot than undershoot because of inflation. I'm wondering whether that's the right default position. In other words, okay, we may go into a deeper slowdown than we wanted as we're making sure that we hurt inflation. I'm not sure that's the right default mode to be in, Jack, because I don't know whether this is the systemic inflation that got so out of control in the 70s and 80s. And if it's not, if it is a one-off that came from the pandemic, then you could sort of assume, they assumed it was transitory initially. Yeah. Why is that definitely not in the back of their mind now, that maybe this is just, and that maybe we should go slowly and see if it takes care of itself before we bring on a full-fledged recession?
So I'm not sure that I'm saying something all that different from what you're saying. Unusual
I said it this way, though.
Yeah,
you said it, yeah, okay.
No, I think that the risk of them overshooting, with near certainty that if they overshoot, it's going to mean more economic pain. That means unemployment.
Yeah.
With 3.7% unemployment, we have some room to put some pressure on the economy.
Maybe we're in a good position to absorb it.
But we should do it in a way that's cognizant of the fact that it's real pain wherever that unemployment lands. And I think that they're moving cautiously.
Inflation's horrible. And to people that, just going through Thanksgiving, it's like, what am I,
The remarkable thing about the difference between unemployment and inflation is everyone feels inflation, some a little, some a little more. Unemployment hits a few people really hard. And the Fed is in a position where they have to balance the choices, which are hard. And I think we're still in an uncertain time.
Mr. Sec, I was just going to ask you, every Secretary of Treasury always says they like a strong dollar. And yet now the dollar is super strong. And the question is whether that, you think, is going to create its own conundrum for the rest of the global economy and ultimately ours.
Well, there's no doubt that the strong dollar is causing some challenges around the world. But it's because the U.S. economy is still stronger than other economies, and it's still a safer place than other parts of the world. So I think the strong dollar is still a reflection of the strengths.
But what do you do about, some economists now, and I'm seeing more and more of it, this idea of a doom loop. You're hearing people in Washington talk about it.
When you say a doom gloom, you mean
a doom loop? No, a doom loop. Meaning if you have such a strong dollar, you create so many problems, you create so many other problems, that creates its own.
I think we're in a very different situation than we were in when emerging market crises triggered global financial problems. I have not seen any reason to believe that we're on the edge of that. What we are likely to see is pain in places that requires attention. Countries that are generally poor countries that have debt crises that need help. And it's going to be at a complicated time when in the past it was the major developed countries coming together and figuring out how to deal with it. Now we're going to have to figure out how to deal with China at the same time because China is the principal bilateral lender in those countries. But that's different than a global economic crisis.